In this presentation, we will take a look at the third method, the most complex method for the recording of accounts receivable and entering of invoices into our QuickBooks system. For more accounting information and accounting courses, visit our website at accountinginstruction.info. If we're using a cash-based system as we've been proposing here, then I don't recommend this method unless we have a really good understanding of what's going to happen with it, because what we're doing here is veering away from a cash basis method with regard to accounts receivable and invoices. So we want to really know what's happening in order to do that, or else we're going to have duplication of recording of things like revenue and things can get messed up. So let's take a look at this. First thing we're going to do is open our QuickBooks file. We're going to open the more complex file, the QuickBooks 3, under our data files and QuickBooks 3. We should have a backup copy. This is the backup files, the data files, QuickBooks 3. We should have a backup file, which will get you this point in time as well if you want to start from there. Just going to double click on the QuickBooks file in order to open it up. Here is our home tab, open items open. Open items can be opened by going to the view tab and the open items list. So we're going to do the same thing. This time we're in the actual file, however. So we saw what would happen when we create these invoices. Let's create a couple invoices here and see what we would do once a payment was received. So we saw what would happen in the prior presentation when we created an invoice. So let's make a couple. I'll create one invoice here, one for a service type of information. Again, Smith, let's say, is our guitar client. We're going to have a guitar lesson, so we have a customer that is giving guitar lessons, and we're going to say the item we're just going to say is guitar lesson GL for the item. We're going to make it as we go by saying tab, set up the item. This one's going to be a service item, and we're going to say OK, and it needs to specify a couple things. How about guitar lessons? It's going to be the item. It's going to be $100 again, and we have to assign an account, which will be an income account, which will be sales in our example. So we have to do that even though we have been recording sales when we receive it, when cash is received. So this is going to be the normal kind of thing we have to set up just for a service type item. So we're going to say OK, and I spelled that wrong. I want to replace guitar. So I think that's right. OK. Once again, we'll say 2 hours of guitar at 100 for $200. And I'm going to give it the date. This time I'm going to say the date is 02. Let's make it outside of our date range that we've been working. So 03, 05, 19. So it's on the next month that we've been working on here. So March. And this will be a typical invoice where we've got the amount, we've got the description that we can then send out. And just like we saw before, we can email it to the client. We can print it out. We can print it as a PDF file if we so choose, by using a PDF printer, which we can find if I go to the print option and we were to print it. We can then use a PDF printer. This is a free printer that you can download, and it'll basically, anytime you go to the print option, anytime you have a printing option, you can choose a PDF printer. So that's one option to be able to email it to somebody as a PDF. Or of course, we can use the emailing option and email it as a PDF from here. You can also really customize the template, so just keep that in mind as we go. In this presentation, we're more concerned with what will be the recording when we enter this information, and how will it match up with our cash basis system that we had set up prior to this. So we're going to say save and close. And you'll note we just did this transaction here, and what that does on the financial statements, when we go to the reports drop down, company and financial and profit and loss report. If we go to the third month, 03/01/19 to 03/31/19, so March 1st to March 31st, there's our revenue. So sales is on the profit and loss now. It's also, if we go to the balance sheet, reports, company and financial balance sheet, if we go to 12/31/19, the end of, we've got accounts receivable on the balance sheet. So this wasn't here before because that's an accrual-based account. So now we have this accrual-based account. If that's the case, then what's going to happen when we actually get the deposit? At some point in time, in other words, they're going to pay us. And if they pay us, we're going to see it on the bank statement. And our normal practice then would go to the banking account, use register. And let's say we saw a deposit on 03/15/19, a deposit, and we don't know who it's from because all we saw was a deposit on the bank statement. We would normally put it on the books for $200 here, and we would normally charge it to sales or income. But if we do that, then of course, if I record that and we go back to the profit and loss, we will have recorded $400 for the same sales item. So that's the problem. The sales under a cash basis wouldn't be recorded till we got the deposit. The sales here is being recorded when we record it here. Now we could go back and we could go to the checking account and say, okay, I know that particular deposit is related to this invoice. We know it by the amount. And we'd have to find some way to know that because we're not actually going to receive the checks. The client's going to get the checks. All we get is the bank statement. So this would only work if under our system where we get the bank statement, if the deposits are exactly in the same amount as the invoices we make, and or if the customer told us about the deposits, or if we're in charge of collecting the deposits in some way, or if they're electronic payments, in which case we'll see who made the payment in the system on the bank statement so that then we can more easily match it out. So that's why this system is a little bit more complex to do. We have to figure that out. If the customer is grouping deposits in such a way that multiple deposits are being grouped at one time, then it's going to be difficult for us to match out because we don't see the actual name on the bank statement of who we got the money from unless it's an electronic deposit or something like that. So if we go back to the checking account, then if we determine, okay, this deposit is something that's in accounts receivable for an invoice we created, one method we can do is we can go, okay, it shouldn't go to sales, it should go to accounts receivable because we need to lower the accounts receivable. So we can just go to accounts receivable. It won't let us record it though, usually it won't, because we have to create a customer for it. And so we're going to go, okay, we got to create a customer. So I'm going to cancel this. And I'm going to go to splits down here. And then the customer, remember, the only customer we have now is Smith. That's who we sold to. And so we say record. And yes. Now this will work, but it's an imperfect method because we really didn't assign the actual invoice. Meaning, if I go back to the home page and we go to that invoice, if we create that invoice and go back to it, it doesn't show as paid here because although it is paid, we didn't connect it to the actual invoice. So if I close this back out, to connect it, we'd have to use the receive payment option. So let's take a look at that in a second. What this did do, however, is if we go to reports up top and we go to customer and receivable and we go to the customer balance detail, then it does match out here for Smith. We have an invoice and we have a deposit. So it does at least tie out on the balance detail report. It just doesn't show that connection on the actual invoice. So that's one thing to be aware of. So the next method we could use is we could say, let's create another invoice. Now let's say this time they're going to sell some kind of inventory. So some type of guitar or maybe just guitar strings or something like that. Some actual inventory. If we do that, we can't really put it in there under our cash basis system as inventory item. Because if we do, then what's going to happen is it's going to record an expense called cost of goods sold. And we're going to have to enter that expense into the system to make the inventory item. And that means that it's going to record an expense at the point of time we sold it. But under our cash basis system, when are we going to record the expense? When we paid for it. So like in other words, if we bought a guitar, if the client bought a guitar and then sold the guitar at a later point in time, under the cash basis system, under what we're doing on the bank statement, is we're going to see the payment that happened for the guitar, record the expense at the point in time that the payment happened, because that's when it cleared the bank statement. If we then make a item inventory item, it's going to duplicate that because it's also going to record an expense at the point in time we sell the guitar, which is the proper time under an accrual method. So if we wanted to make an invoice for a client where they're going to sell a guitar and kind of stick with our cash basis method, we could just still basically just use a item that would be a service item. So let's see what that would look like. We're going to say, okay, it's another customer, Eric Music, and we're going to say quick add, and it's going to be $315, and we're going to say that this one was a GG Gibson guitar we're going to have, and we're going to say add that Gibson guitar. Now you would think it would be an inventory item, but I don't want to add cost of goods sold. I don't want to deal with that. I'm just going to keep it as a service item because all I want to do is record the sales side of it, because on the inventory side of it, I'm recording it not perfectly, not very correctly on an accrual basis, but I'm recording it when we make the payment because that's when it cleared the bank statement. So we're going to say this one's going to be a Gibson guitar, and it's going to cost $500. I don't have any cost of goods sold because, again, I don't want to record the cost of goods sold here. I'm going to record it when they paid for it, and I'm just going to get that from the bank statement and record that out as it goes. When they pay Gibson, I'll see it on the bank statement, and that's when we're going to have to decide where it should go. That's when we can apply it to cost of goods sold. Won't match up. The timing will be off, but it'll work in the long run. And then the account would be sales. We're going to say okay. And so then if we sold one Gibson guitar, then that's how that would look. So this would be an inventory item. We'd say save and close. And then once again on the profit and loss, if we go to the open windows, we'd have 700, and part of that is the Gibson guitar. Now we could break out a couple different items with the sales item, revenue, versus a service item if we want to, or just have one account called revenue. Either way would work. I'm going to close this back out. But note there's no cost of goods sold under this method again, because we're going to record that when we make the payment. So now what would happen is on the Home tab, what we'd have to do is recognize when we get that payment. So if we go to the checking account in the check register and we'd say, oh, there's a deposit for $500. We'd have to say, okay, do people owe us $500? Is there an outstanding receivable for $500? And then not enter it directly into the register as we did for normal deposits, because we need to go through the full accrual system. This would be the most proper way to do it. Go to the Home tab and then say receive payment here. So once we see it on the bank statement, we go to receive payment, and then we can go to the Eric Music, and there's the 500 and say we've got the 500. Now we can do this in a one-step or two-step process here. If we want to put this 500 directly into the bank, which would be the easiest thing, we'd have to go into preferences here, and we'd basically change the preference here not to use this undeposited funds. I won't go into all the details on that. I'll do the two-step method here, and then you could look that up. So I'm going to close this out, and we're going to record the deposit. The full method would typically be, okay, save and close this, and then we record the deposit. Going over here. There's the one we don't want to deposit. Okay. Into the checking account as of the date that it cleared the bank, and then say save and close. And now if we did that, if we go back to the checking account now, the register, then we'll see that deposit. There's the deposit for 500. Now you might be saying, well, why didn't we just enter it directly into the register like we did this one? The reason is if we go through that full process, then when we go to the Home tab and we find that invoice, go into this invoice, prior invoice, it shows as paid. So this is the way that we can kind of track not only through the report showing who has paid us and who hasn't, but it'll actually link out the invoice and say, hey, this invoice has actually been paid. So the full process should be to connect those two out. So you can see how this really deviates from a cash basis process where if we go back to the checking account, we can't just take every deposit and use our normal assumption as we did in the past, which is just if it's a deposit, it's sales. That's what we want to, that's the idea that we want to have. So if it was a service company or someone that sells inventory, either way, it's going to kind of mess us up if we're tracking the receivables for a cash basis system. If it's inventory that we're tracking, again, that could mess things up even more under our cash based system if we try to record, say, the cost of goods sold. But either method, again, probably something we want to avoid unless we're doing more of the full service bookkeeping process, unless we set up a formal plan. Let's go back to the customer report one more time and go to reports up top, customers and receivables, and we'll go to the customer balance detail. And you'll see this should be the reports that we can kind of get every time we do this. We will get every time we do this, and we can give this to the customer as part of the process if we were to do this service. And that would be, here's the invoice, here's the payment. Here's the invoice, here's the payment. If we drill down on this, notice if I double click on this invoice, then I see that the payment being made for the $500 invoice. And we can even connect it if you see this detail on the side here. If we go down and look at this date, we could say here's the payment that happened, and it goes to the payment window. Okay, if we close that back out, that's the one we did the more in the home page. If we look at this one, however, the 200 that still got paid, if I double click on it, we don't have that connection here. We can't see that because we just entered it directly into the register. So we don't have the connection of this invoice to the payment that had been received, although we do see the ins and outs in terms of the report here. For more accounting information and accounting courses, visit our website at accountinginstruction.info.